Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. Thanks for joining me today. All right, we're going to talk some socially responsible investing today. I love topics that are prompted by just conversations I'm having and seeing in various forums, and this is one of those. It seems like I see this a lot. I'm in a couple of socially conscious investing and socially conscious financial forums and groups. And I see conversations a lot about investing in ESG funds and socially responsible investing, and just how to, choose the right funds and how to invest in alignment with progressive values and socially responsible values. And so, one of the questions today, not really a question, but one of the topics of discussion today in one of these groups was, "Hey, how do I evaluate funds? How do I, figure out what's what?" Because I see a lot of greenwashing out there. I see a lot of funds that seem to say they're ESG or say they're socially responsible, and I don't really know what's what, because when I dig deeper, it seems like it's just kind of lip service. And so, help, what do I do? And so this is a great topic, and I realize I haven't really covered it this specifically before. So we're going to talk today about how to evaluate socially responsible investments. So I'm going to start out with a little bit of background here. As many of you know, kind of my specialty and my focus in my firm is socially conscious investing, or socially conscious financial planning and ESG investing. And I'll explain a little bit about what that means for those who might be newer to it. So let's start with just kind of the backstory on that and the foundational elements of what we're talking about. So there is and by the way, this is covered in a previous episode. So if you look back at previous episodes, I forget the number, but there is one episode on specifically ESG investing and socially responsible investing. So maybe go check that out as a precursor. But in general, here's the executive summary. So some investors want to align their money in a way that creates a positive impact in the world. And there's a whole rabbit hole we could go down about what does positive impact mean, but there is kind of a general consensus in the community of what that means. And so the practice of socially responsible investing, or ESG investing, or impact investing, which we'll define these in a minute, is the practice of aligning your money, aligning your investments in a way that, in theory, provides a positive impact in the world. And this often takes the form of positive environmental impact, things like avoiding things that negatively impact the environment. It can also take the form of making a positive impact when it comes to social issues and social justice, and also when it comes to corporate behavior. So these are some areas where a lot of money is being focused, and a lot of investments are being aligned. So there's not really yet a lot of clean definition around some of these terms and practices and the metrics and the guidelines behind them. It's an evolving area, but there are some terms that you will likely be maybe familiar with or might become familiar with. One of those is socially responsible investing, or SRI for short. And one accepted definition of this is a practice of using screening and exclusion to divest or positively invest in a way that creates a positive social or environmental impact. And so it's basically, removing things from funds that might be fossil fuels or might have toxicity in the environment, and possibly adding companies and adding securities that are maybe making a positive impact in certain areas. So that's basically just kind of the general overview. And that's sometimes an umbrella term for all this stuff. The socially responsible investing is somewhat of an umbrella term that encapsulates lots of things. Within that, there is something also called ESG. ESG stands for environmental, social, and governance. And this is a way of getting a little bit more specific and targeting those three specific areas of impact. And these are metrics by which we can measure risks for companies and investments outside of the typical financial accounting framework. So this, not necessarily things like, financial ratios or profitability. These are specific factors that measure risk. And so it's not just about the social or environmental impact. It's about those factors in relation to the risk that it applies to the specific companies inside those investments. One example would be an environmental risk and impact is an oil spill. Oil companies being inside of a portfolio, that there can be some sort of exposure to PR risk and therefore financial risk, as well as environmental risk. It all is kind of in alignment. So this ESG lens is how we can view and evaluate certain investments in those areas. Impact investing is also a term you might hear related to all these things. And impact investing is a practice of investing in companies and funds with an eye toward both the financial returns and a measurable social, environmental, et cetera, impact in the world. So something specific happened as a result. A company changed their policy. A school was built in a certain, developing country. Some sort of impact was made. Some sort of outcome was achieved. And that goes a little bit of a step further from ESG and socially responsible investing. So if you're thinking about some of these terms, you can think of SRI, or socially responsible investing, being kind of an overarching philosophy, while ESG is somewhat of a toolkit for evaluating investments. And then the impact angle is also sort of an additional lens by which we can view investments and determine whether they made an impact or not. And the impact mandate can be included in investments to say, hey, this fund is designed to make an impact, and here's how. So again, it's an evolving area, bigger discussion than we're going to have just today on some of those definitions, but that's sort of some backstory on ESG, socially responsible investing, and impact investing. So what is the lens by which we view these investments? Now, there are a lot of ways you can align your values with investing. So typically, and I say typically because this is fairly mainstream, and sort of the general body of investing is kind of aligned in this direction when it comes to these factors. SRI, or ESG investing, is typically aligned toward things that make a positive impact in the environment, things like avoiding fossil fuels, avoiding deforestation, promoting sustainability. Also social justice, positive social impact, inclusive environments for races, gender identities, et cetera, treatment of workers, human rights, child labor. These are all issues that are encapsulated under the social aspect. And positive corporate ethics are also included. So things like executive compensation, board independence, transparency in political donations. Generally, it's kind of a progressive agenda, and I'll be very upfront about that. So when we think about socially responsible investing, typically the momentum and the most effort and resources right now are being put behind this general progressive tilt. And that doesn't necessarily have to mean politically progressive, although it often does. I think there are plenty of people that maybe don't identify with a political party, but think that we should take care of the earth, and think that we should treat people well and be inclusive and promote equity. So I think that often the two do align, the politics and the philosophies do align, but they don't necessarily have to. It's more about, honestly, these things that I think we should all care about, honestly. So now, I'm not saying if you don't invest in this way, that doesn't mean you don't care about these things, but some people enjoy that they are able to align their money with these particular progressive values. So now, that being said, I will just say as a caveat, there are other ways to align your values. Some people have, very conservative political values, and there are funds, mutual funds out there that align with certain political parties. They might have certain issues that go beyond just, the environmental or social, and they might be a little more specific, a little more detailed. And there are funds you can find that align with a lot of different issues that aren't necessarily on this particular agenda. But by and large, this is the direction the industry is pointed. This is what people think of when they think of socially responsible investing, is, the positive impact in the environment, positive social justice impact, and positive corporate ethics. So that is the foundation, the lens by which we typically view this type of investing. So how do you evaluate funds? So this came up this comes up a lot because socially responsible investing is becoming somewhat trendy in certain circles, and it's become trendy enough that there are a lot of financial institutions and mutual fund managers that are jumping on the bandwagon, so to speak. Now, by the way, I'm not going to name any specific funds, any specific fund families, any specific securities or stocks. I'm not going to name any of that. For one thing, I just don't want to, get too close to the line of appearing to give specific recommendation on a public forum here, which is not appropriate. I don't know who's listening, so I can't make specific recommendations. But for another thing, I just think it's better to keep it generalized because everyone's approach is going to be different. Everyone's a different experience. So we're just going to keep it generalized, but you'll be able to pick up the gist of it. So there are some very large mainstream financial institutions out there that have historically not promoted socially responsible investing, but who are now adopting this as, at the very least, a label on certain investments. You'll find certain funds, for example, that say ESG or socially responsible. And again, this topic came up because there are people that have noticed, hey, this fund says ESG. But when I dig deeper and do some analysis, it's a lot of coal industry and fossil fuel exposure. They don't score very well on human rights. It kind of does better than the norm, but it hasn't really done a lot to make an impact. And there might be zero impact. It may simply be just excluding some particular companies and slapping a label on it that says ESG. Now, there are some companies, which we'll get to shortly, again, not by name, but in concept, that are based on socially responsible investing. Their whole identity is based on this type of investing. And there's others in between. And so some people haven't necessarily had the time or the expertise or the desire or the skill to go deep enough to really see the full landscape of what's available. And so they end up, looking at these big mainstream mutual fund companies saying, oh, well, this says ESG, and boom, there I go. I'll just put my money in there and I've checked the box of being socially responsible. And again, then later they might find out, well, this actually is not that socially responsible. This, it's kind of lip service or greenwashing is what it's sometimes called in the industry. You're kind of using it as a marketing mantra, but then, under the hood, you're not really doing a lot to align with the socially responsible values. You're using it more as a marketing or a label tool. So that being said, let's talk about some ways you can evaluate investments and dig a little deeper. And I'm going to start by, this is the bulk of what I'm going to do. I'm going to go into some tools I use and kind of how to use them and some ways you might think about evaluating your investments. So one of my favorite tools is called Investor Values from As You Sow. We're going to go through about 5 or 6 tools here, but this is the one that I think is probably the most user-friendly. It's incredibly useful, it's incredibly powerful, and it's a great place to start. And by the way, these are going to be linked in the show notes. So if you go to episode 132 on my website, just grab the show notes for this one. You'll see it in the links in there. Normally I just put a little blurb, but this time I'll have links to these resources. So Investor Values allows you to not only plug in mutual fund symbols and get scores for them, but actually find and screen and search. So they have a number of tools. I'm going to start with just kind of the fossil-free funds as an example here. And you can't see me, I'm clicking over here, but what you can do is you can click on a button that says, hey, give me the top rated funds in these categories. And you can filter by asset class, you can filter by type of mutual fund, and it will give you the top scoring funds based on these metrics. And that can be a really great starting point for finding the very best and most impactful funds that you could consider. Now, I'm going to pause for a minute, and the word impactful kind of is a great side note into this philosophy of impact investing. So often when you are using mutual funds from, again, those big mutual fund companies we all know about, you don't really often see a lot of impact. You see some exclusion. You see, again, some, hey, we're going to avoid a few fossil fuel producing companies. We're going to avoid this or that. And that's kind of it. But you don't often see that they are building an entire philosophy around having open dialogue with corporate executives at these large companies that are in their funds, or producing, doing shareholder advocacy and shareholder resolutions to affect change, and how they proxy vote doesn't necessarily reflect the ESG label. So I personally prefer being as impactful as possible. And that usually takes the form of investing in funds that have a mandate or a philosophy around this type of impact. These funds not only exclude fossil fuels or align their composition with socially responsible values, but they go a step further. They actually have dialogue with corporate executives. They vote by proxy and vote for things that align with the socially responsible agenda. They submit shareholder resolutions to affect change. One example would be, encouraging a particular company to become carbon neutral by a certain date, or encouraging a particular company to effect a certain policy that improves workplace conditions in their factory. So these are actual outcomes that can happen as a result of shareholder advocacy. So to me, it's, and again, I'm going to try really hard not to name names, but if you're trying to exclude a certain company, a lot of people say, hey, there's this big company out there, I want to exclude that big company. Well, by excluding a big company in your portfolio, they're probably not going to feel that. But if you allow that company to be in your portfolio and you align your money in this way that is used by the fund manager to then go to that big company and have them affect a change in their policy or the way they operate, that is a change that I think is more impactful. And so this is the type of investing that's important to me. And you can't really get that always with these kind of vanilla mainstream ESG funds you get from the big names out there. So I'm a little biased, I'll admit. I'm not crazy about just picking the one labeled ESG in your favorite big fund family. I think it goes deeper than that. And so, as you sow, going back to this, I'm going to kind of get back to the main point here. As you sow, Investor Values, the tool from As You Sow, rather, is a really great starting point. It lets you screen, lets you see a lot of impact scores, lets you see scores in different areas like fossil fuels, deforestation, gender diversity. You'll see a lot of great metrics you can start to use as you evaluate. Also, the next one I'm going to look at is, or I'm going to talk about is USIF. USIF is the Forum for Sustainable and Responsible Investment, and it is a nonprofit organization that is kind of the leader in promoting socially responsible investing. And there are fund families that are member companies in USIF. And if you go to the USIF homepage, which is ussif.org, and click on mutual funds and ETFs on the homepage, you're going to get a really nice list of mutual funds along with metrics and data about those mutual funds, as well as how they've done proxy voting, the shareholder resolutions they've submitted, the advocacy areas that align with those funds. So you'll get a really nice matrix and a grouping of funds you can look at as well as part of your research. That's a really great tool and one of the leading resources for finding these types of funds. Another one I like, the MSCI. Sorry, let me grab the tab here. The MSCI ESG Fund Ratings tool. Again, this will be linked in the show notes here. It also allows you to put in a mutual fund. And when you put in a mutual fund, it'll give you some scores and metrics about that fund. They're a little different than you get from other sources. They kind of do a peer ranking, which is different than As You Sow gives you. As You Sow gives you more of a kind of a letter grade score. As well as whether the fund has a sustainability mandate. That's important as well. So you want to look for that sustainability mandate. The MSCI ratings will give you kind of peer relative scores relative to peers. And one nice tool or one nice feature of this tool is it shows, hey, is this fund a laggard, average, or a leader in these categories? And so it's a nice way to see, hey, is this fund in the leading percentage or the leading group among its peers when it comes to creating impact? Another tool I like is the ESG Ratings and Climate Search tool, also from MSCI. And this one lets you rate individual companies, which translates to individual stocks. So if you're looking for how socially responsible is this particular company, you can plug in the stock symbol for that company and get similar scores for that company. So those like myself who maybe have a little bit of exposure to single stocks in addition to mutual funds in a portfolio, this lets you kind of build your own little grouping of favorably rated, socially responsibly rated individual stocks as well. The Morningstar Esg Screener, also somewhat useful. It's a little bit less data rich and a little bit less visually appealing, but it does give you kind of a snapshot. You can plug in funds there and kind of get a sustainability rating across the board. It's worth a look. And then the Sustainalytics ESG Ratings tool, I enjoy that one as well. It's also really good for individual stocks. So it's a great way to plug in individual stocks and get some scores on, it really measures risk. And so the risk is kind of translated to, hey, how much of an ESG risk is this company exposed to? So if this company has particular factors that could lead to negative environmental impact, that would be seen as an E risk in the E category, environmental risk. So those are some really nice tools. I also personally, as an advisor, use a tool called Your Stake. It's at yourstake.org. And I'm not saying you should use this tool, but it is not a free tool. It's a paid tool. And I use that to create really nice reports for my clients when I work with them, and it goes a little bit deeper. But the other tools I've mentioned are all free. And I wouldn't just use one. I would maybe kind of cross-reference, because you'll get different data from each one. So when I'm evaluating funds, let's say you're starting from scratch. Let's say the most you've done is to look at, big name vanilla fund, index fund family XYZ, and you found ESG labels, and that's as far as you've gone, and you want to go deeper. Well, the first thing I'd probably do is go to investor values from As You Sow, start to do some screening on the types of asset classes you want to dig into, get some fund families that keep popping up and showing that they're at the top of the list. Look at the funds within those families, look for the sustainability mandate, look for the scores, the exposure to different areas, and start to build a knowledge base of, hey, these are fund families that seem to be building a foundational business model on socially responsible investing. And again, I'm not going to name names, but you'll find them. Contact me directly if you want to go even deeper, but I don't want to get into specifics on the air, so to speak. So you'll find those fund families, and they may be ones you haven't heard of before, because they aren't really, in the mainstream, like the big names you probably hear of all the time. I would then maybe go to USIF, cross-reference, kind of look at what they have to offer. And within USIF specifically, I really like to look at the scores and the proxy voting. So within USIF, you can go into the proxy voting tab as you're looking at these screens. And within that, you can then kind of scroll down and look at which particular funds are showing proxy voting activity. And it should say, it's available online to view. And some funds will not have proxy voting activity, some will. And this will tell you where funds are making an impact. If you're listening after the fact, you may know, and just FYI also, I do this via Facebook and YouTube Live. And I do have Danica joined and has a question here. Danica saying, joined a little late. Is there a list somewhere of tools mentioned? I caught Sustainalytics, As You Sow, Your Stake. Yes, absolutely. I'm going to have these listed in the show notes. So in the morning when this pops out on the website, the show notes will have links to all these tools I mentioned. So just to kind of review the tools I covered today: investor values from As You Sow, USIF, MSCI ESG Fund Ratings, ESG Ratings and Climate Search Tool from MSCI, Morningstar Esg Screener, and Sustainalytics ESG Ratings. These are the tools I typically use to build lists of funds and securities. So thanks, Danica. Appreciate you mentioning that question. So let's say you've done some screening there. Okay, great. You've kind of built a list. You're putting these funds together, these securities together. You're looking at the list of things you're interested in based on scores and activities and proxy voting and impact. What are you gonna notice? You're gonna notice some trends among fund families. You're gonna see, hey, this fund family seems to really actually go beyond lip service, and they actually seem to build a business around focusing on socially responsible investing. So I would go deeper into those individual fund families and start to look at their websites, and you will often find there are annual reports showing the advocacy behind these investments. So you'll find that, hey, this particular fund, the management of that fund contributed to making an impact in changing a company's policy, or again, encouraging a company to become carbon negative, or to have some sort of outcome as a result. And those reports will show you specifically what happened. You often won't find that in some of the mainstream companies, but these specifically ESG focused companies will have these reports that are built around the impact they made in the world. Also, be sure you evaluate among non-ESG factors as well. So as you're evaluating funds, don't forget the other stuff that's important. And I mentioned this in episode 126. So if you go find 126, this is an episode all about how I evaluate mutual funds and ETFs. And this is more of the financial factor stuff. So this is things like, how long has the fund been around? What's the asset size of the fund? How many assets or how many dollars are in the fund? What's the size of the fund? Fund manager longevity, things like that. So that stuff is also important. So you want to kind of overlay that onto your evaluation as well. And then as you're doing that, obviously apply that as an overlay to your asset allocation. Asset allocation is kind of the composition of your portfolio. At its simplest form, it's equities and fixed income, which means stocks and bonds, basically. So at its simplest form, you might have a broad spectrum, stock fund, and you might have a slice of international stocks. You may have a a slice of emerging markets. You might have a slice of fixed income. So you might have some broad categories, and you want to apply these funds based on that asset class. Your asset class should be sound and kind of encapsulated independently, and then your ESG or your socially responsible investments kind of overlay and plug into that. And then you want to monitor and reevaluate periodically. Things are changing all the time. So there may be new fund families and new funds emerging. There may be funds that are reaching maturity and reaching kind of that 3 to 5 year mark where you might feel comfortable investing because they have the longevity there. There might be changes in the composition of certain funds, and they might change for the better or worse, and you want to kind of reevaluate. So every year, annually at the minimum, I evaluate these funds, and I kind of build portfolios based on the screening and reporting from these tools and other similar tools. So be sure you don't just kind of leave it alone for 10 years. You want to evaluate and make sure that your ESG alignments and your socially responsible desire to invest is aligned still with the investments you have, and you may or may not want to make a change based on that. So that is, I hope that's not overwhelming, but that is kind of a process I go through, and hopefully these tools will help you dig a little deeper. And I want to leave you with a few points to remember here. One of these points is actually a few points. One is ESG is just a label. It doesn't necessarily mean you're getting what you want. I'm just going to speak kind of plainly. So again, you'll find these really big mainstream institutions that will slap ESG as a label or socially responsible as a label on their funds. It doesn't always mean that they are making the impact you think they are making. You may have to dig deeper. You may have to do more research, and you may have to go a little further in your screening and your evaluation to really get what you want. Now, going with that, you can't achieve perfection. Don't try to achieve perfection. You're never going to find a mutual fund that checks all of your boxes. It's just not going to happen. So progress, in my opinion, is the goal here. It's not about perfection. It's not about finding the perfect investment or the perfect mutual fund that doesn't have any issues at all. It's about progress toward getting better and better. And I think if you do this research, you'll find there are investments out there that are way better than some of the kind of the vanilla ones you see out there. And then I also want to focus on fees for a minute, because this is a big topic that comes up all the time, and it's very noisy. The fee conversation is really noisy out there. So when you look at funds on a website, typically the returns are posted net of fees. So when you're looking at the returns and the performance of a mutual fund, that is after the expense ratio, after the fees have been applied. And so I bring this up because there is a huge contingency, huge, conversation out there about fees. And there are a lot of investors that are extremely, I'm going to say obsessed. I'll just use the word obsessed with low fees. They just will not pay anything more than, a tiny fraction of a percent on fees, and they make fees the most important thing to them. Well, fees are important. You don't want to pay too much. I'll give you that. But when you're looking at socially responsible investments, often the fees will be higher. When you find the funds that truly make an impact and truly go beyond just the labels and the greenwashing, often the fees will be higher because they're actively managed. A lot of their factors go into it. They're going to be higher. So I would encourage you not to let that turn you off and say, oh, well, these fees are too high. This is an expense ratio of 0.86 or whatever. Like, don't let that turn you off, because when you look at the returns and the performance, you'll find that net of fees, they're often very comparable, often even higher performance sometimes than their non-ESG equivalents. So I think fees are overemphasized often in the investing conversation we're having today. There are some, one or two companies out there, mainly one, that has really pushed that conversation to their benefit. And again, we don't want to pay too much, but let's not let fees be overemphasized, because they're often things that are more important to some people, and often the fees aren't the detriment you think they are. When you look at the performance, often and stack funds up side by side, often the fees really don't make a difference when it comes to performance. So don't get too hung up on fees, is my point. All right. So with that, I'm going to wrap up there. Again, this list of tools are going to be on the show notes for this episode, which is episode 132. So go to the website, check it out there. If you're listening live here, it'll be there tomorrow morning. So after January 26th, the morning of that Wednesday, they'll be posted. You'll have links to all these tools. And I hope you find it interesting and kind of fun to do some screening, some evaluation, looking through these tools to score different funds and kind of decide, what's important to you. And maybe it's good enough to go ahead and just kind of exclude some fossil fuels, and there are other factors you're weighing against it, and you find a good balance point. Others might say, wow, if I'm going to do this, I really want funds that are making an impact. I really want to see companies changed. I really want to see these environmental, social, and governance values and agendas really pushed forward. And so these are going to give you some really interesting tools, I think, to do some evaluation, and I hope it sheds some light on going a little bit deeper beyond just the labels you see out there. So the Nika says, great insights. Thanks so much. Appreciate that. Glad you stopped by. Thanks so much. All right. So with that, we're going to wrap it up there. So as always, you can find me on the web at elevationfinancial.com. And I got to turn to the right here to turn on my music. So that's why I had to pause. So if you are interested in learning more about this, I'm super low pressure. So you don't even have to think about becoming a client. You can just book a money session on my website, and I'll answer questions for you. And if you'd like to learn more about working with me, cool. If not, that's also cool, but I'm happy to answer questions. So if you want to dig deeper on any of this stuff we've talked about today or anything else, look me up at elevationfinancial.com. And thanks as always for joining today. Have a great day. See you next time.